All right. Well, hey, I am up here today with a really a long-time friend, a guy that I actually met back probably in like 2008, 2007. It was a long time ago. So we're talking almost 20 years ago. He hasn't changed a bit. I look different. He looks...
I was going to say the same thing. You look the exact same as when you were in Cincinnati.
That's
not
right.
a change.
I appreciate that. So Tim and I actually met in Cincinnati, Ohio, and kind of out after the 2000 kind of bubble bust, Cincinnati was in this interesting place to kind of rebuild its startup ecosystem at that time. And we were both early he was like crushing it in tech career, working for Spark People, which is a medical kind of weight loss community platform. Am I getting that right?
Yeah, digital health media company is what we eventually became.
Yep.
Yeah.
So, I mean, it's amazing. And then we kind of started doing meetups. We started doing some pretty grassrootsy things in the early days and, pulled off a lot of volunteer hours of get the like-minded people together. And it turned into, and we're going, then the right things started to click forward with funding partners with the larger corporations in town and investing in the ecosystem, and it really just took off from there. And we're going to come back to talking about startup community and ecosystem and how to build that and what might be really important for Reading and its click forward in this community. But first, I wanted to kind of give Tim an opportunity to kind of tell a little bit, maybe like a nonlinear movie. You know how you kind of start at the end, like the murder happens and you're like, how did it happen? And you're like,
right.
And I think the point now is that we're doing a fireside chat, but you actually have a venture firm fund that is called FireRoad, which is,
right.
you make parallels, but we see it and the birdies understand it too. So this is good. But can you tell us about that and then kind of how you got there?
Work backwards into it?
Yeah, that'd be great.
Yeah, for sure. Well, the name is FireRoad, and just a quick primer on why it's called that. It's because we have a lot of things in common, as it turns out. One of those is we like to ride motorcycles in places that motorcycles weren't really built for, and those are the fire roads. And so that's one of the hobbies I have, is like find that off the track road that's going to take you into the woods. It's like you're going to get lost. It's going to be muddy and messy. You're probably going to drop your bike. It's probably going to break down at some point. You're not going to have cell service. Like, it's a lot like a startup journey, right? And yet we voluntarily choose to look for that road, right? So that's the name behind FireRoad. What we're doing is very early stage venture capital. So we invest in companies, I call it at the chaos stage. Like, you've got an idea, sometimes even just a pitch deck, honestly. Although today with AI, fortunately, that's pretty rare. Like, almost everyone's built something by the time I meet them. But they're like first product, first couple customers, still trying to figure out which way is up, and we go, awesome, love that stage. Maybe it's the riskiest, maybe it's the craziest, but for whatever reason, I've been inclined to that stage, drawn to that stage, both as a founder, which we can get into, as an angel investor, and then now as a VC. So we invest in companies at the earliest stages. We've got a thesis around small business America. We believe that America is still built on, small businesses are still the backbone of our country. In towns like this, it's a great example of it, where you might not have a Procter & Gamble like we have in Cincinnati, but there are a whole bunch of little businesses that make up jobs that are awfully meaningful to the members of this community, right? So what we believe at FireRoad is it's crazy that almost no venture has focused on that category. Everyone wants to back the next enterprise SaaS company or the next B2C, social media platform. 3% of venture focuses on this category that I describe as kind of like Main Street tech. Founders actually building solutions for the kind of businesses that AI is not going to disrupt, by the way. Only 3% of venture. Meanwhile, 45% of all IT and software spend in America is done by SMBs. So we just see a massive opportunity, and by the way, it's awfully meaningful to get to back founders building solutions for the kind of businesses that are powering jobs and community across our country. So that's what I'm doing today.
So I have 5 women that live in my house, 4 daughters, and I had to pull a lot of hair out of, often about every 6 months, out of the
Yes.
drain. Does anyone know about this?
Four kids also, two daughters, another
okay.
thing we have in common.
All right, so you understand, and somehow I just keep thinking, like, if only AI can solve this problem.
Right.
Some reason I think plumbers are very safe. I think they're very safe, but the tools that they need to grow and scale those businesses and to do that better,
Yes,
I imagine that's what you mean by mainstream.
That's exactly right. I make this joke all the time. It's like AI isn't going to disrupt the plumber anytime soon. Maybe Elon will have robots in our house someday. Like, that's going to be a while. We've got a decade, I would say. Who knows for sure? But it can sure help us build a better plumbing business, right? We can use this technology to help scale companies. And one of the things we care an awful lot about is, I don't want to disparage private equity because there are some great PE firms out there, but there's an awful lot of gobbling up of HVAC and plumbing and roofing and home service companies from the coast, from big PE firms on the coast. And more often than not, like, those companies lose their identity. They lose their culture. Their employees are not taken care of in the same way. Their customers are not taken care of in the same way. And so, again, not all PE firms are equal, but like, we just think it's a shame to see owners of these regional home services business have to make a decision. Do I sell to the highest dollar? Do I shut the doors? Or am I fortunate enough to have a family member step in? It's fairly rare, unfortunately, right? So what if, though, we could build tools that would help get that tribal knowledge out of their head and into systems and processes that could actually help them scale, maybe even bring in another operator and transition those businesses besides just kind of sell and ride off into the sunset?
Yep. How many people in here actually might be a part of a company that is similar to this, kind of trades, services, field service?
Blue collar.
Yeah, blue collar. Okay, we've got some.
Okay.
Yep. Okay, we've got a handful. How many have family members that are in those, or might own family members that own businesses in the trades? Okay, so a little more. I told my dad when I was a teenager, he's in HVAC, he owns his own HVAC company, and I was like, I will never be in the trades. I'm gonna do tech. And then now I build things, so this is great. So he reminds me of that all the time. But
yes.
But it is interesting. I want you to help me with this. Why this for you? Is it just a market opportunity? You said, I read on your website 43% of kind of small business kind of represents that like 43% or something.
Yeah,
of
45% of all spend is
of
in
all spend.
S&B,
3% of the VC spend is on those types of businesses. So there's a big. It's an interesting opportunity for you to kind of fill a market. But I feel like, is there another reason why that you wanted to serve that market? Because as long as I've known you, it's not like I haven't seen you in the trades per se. I've seen you in tech, but is there a story there? Is there a linkage to wanting to serve kind of Main Street?
Yeah, the data we actually backed into. So we didn't start because we came across those stats. The closer we got to the action, the more we realized there was an opportunity. We started because we have a heart for small business America. Like the last company I started before FireRoad was a small business insurance company called Coterie. So again, one of the things we realized is less than half of all small business owners actually have a general liability policy. And that's actually a huge risk to them and their families. And the reality is, nobody enjoys buying insurance, and it's not a very pleasant process. What's interesting is it's also not a very pleasant process if you're an agent selling small business insurance either. So I spent 5 years fully engulfed in the small business world, and the closer I got to small business owners, and my father-in-law was a small business owner as well. For a decade or so, because of watching my father-in-law's business, it was like they were a second-generation family-run, local distributor, and they had no plan to transition the business, and they never brought in anyone to take it over, and they didn't want to bring the next generation. I'm like, man, that sucks. They built a great business that actually could, as an entrepreneur and a builder, you're kind of watching this and going man, if I could just get my hands there's some really cool stuff we could do there. And, unfortunately, during COVID, my father-in-law passed away, and I went in to meet with his brother, my wife's uncle, and he looked at me, and I'm not kidding. He said, "Are you ready to take this thing over now?" I'm like, I just raised a Series A for a venture-backed startup. I've got 60 employees. no, I can't. No, but I wish we would have had this conversation a long time ago. So I ended up going through a fire sale process with them. We were able to sell the business, and it was an okay outcome. The thing I was most proud of throughout that process was there were about 8 employees of that company, most of which had been there for like 20-something years, and we were able to save all their jobs. And so the family didn't make a ton of money, but I was like, man, that could have gone really poorly. It could have just been a shut the lights off and sell the inventory and that's it. And I'm not sure what those employees would have done with the rest of their career. So I've seen enough examples of that where I go like, man, if more than around half the jobs in America are represented by these kind of small businesses that don't have a succession plan, like that's a real risk to our communities and our economy. Like I can't solve that problem for the whole country, but maybe we can build a model that helps these businesses transition better. And so that's what led into this thesis.
Yeah, and I think that's a great story. I didn't actually know that beforehand. We haven't had it. He got in at 10 p.m. last night because of like delays and all this stuff, and we only had a little bit time to catch up, and then he woke up at 3 because he's on East Coast time. So good job. He had his first cup of coffee a lot earlier.
The coffee was great, by the way.
Yeah,
thank goodness.
Hey, how's Reading treating you? You went out to the Sundial Bridge?
Yeah, it's beautiful, man. Okay. This morning, the walk out there, it's a really cool area.
That's cool. I'm glad you're getting to experience it. Looking at your website, it's not just trades. You manufacturers. You guys are invested in. You look at retail, grocery. There's a number of different types that kind of represent under that kind of small business enterprise. Tell me what you're looking for. If someone, like, how are you investing? Maybe give us an example of something you guys are invested in and how that process worked when they came into you and how they approached you. I know that on your website you say, hey, like, there's a reach out. Like, some companies can connect with you guys. Yeah. What did that look like for maybe an example company?
What I would say is, like, one of the big advantages of being an investor in this category is, like, we're kind of one of maybe 5. Like, there's just not that many people with a thesis that looks similar to ours. So if you're building for the trades, for blue collar, for Main Street America, you're building a software startup, an AI startup, focused on one of those categories. There's a whole lot of investors who will say, we don't invest in startups who are building for small business because the CAC's too high and the LTV's too low and it just doesn't make sense. And so fortunately...
Can you explain those?
Yeah, sorry. So the CAC, the customer acquisition cost, like if you have to get a bunch of small business customers, right, this is the conventional wisdom from a venture capitalist. Like, if you're selling to small business, it's going to take you way too long to get enough customers because you can't charge them enough, right? So it's going to cost you too much. It's going to take too long. You can't charge them enough. Like, you just can't build a great venture backable business by selling to small businesses. That's been sort of the refrain for many years. And so while that is starting to shift, and you're actually seeing even large venture funds now start to do carve-outs and even some roll-up stuff, like tech-enabled roll-up, we're still one of the few who's like, this is our jam. This is what we do all day, every day. So we've got really good inbound. One of the stats I saw earlier, I think Aaron said, like, you're looking at between 50 and 450. We look at about 150 deals a month. Almost all those are inbound. And, we'll do, one deal on average every month and a half. So it's cherry picking. Like, we get to pick the best of the best, which is awesome. But what we're looking for is, like, we want founders who are building for a category that we would describe as AI resilient. The trades is, home services is, these are good categories, but we want to understand that or believe that the category you're building your solution for isn't going to get completely disrupted by AI in the next decade. Okay, so that's kind of the first point. Second point is, like, we want to see domain expertise. We want to back founders who know something deeply about that category that it would be really hard for, two 22-year-olds jumping into YC to just compete with them. Like, something about this category that other people don't know. Maybe it's network, maybe it's knowledge, maybe you've been building in the category. So there's one of the founders or more who has deep domain expertise. We look for, like, a really strong go-to-market person on the cap table. Like, we want one of the we believe, like, building technology is no longer the moat, and not that it's still challenging to build a great technology product, no doubt about that. But it's not the moat anymore. It's not, it's been discussed already a bunch today, so I won't go into that. But, the reality is, like, people can build great products pretty rapidly. We do want a technologist on the cap table who is leading the charge on that. So those are kind of the 3 things we're looking for. Again, ideally, you have built a first version of a product and you've got some early customers. We get to come alongside you and help do that. The last thing we really screen on is we have to believe that if we're on your cap table, we're going to give you some competitive advantage. Like you get an unfair advantage by working with us because our network, our experience, there's got to be some reason for us to believe that if we're working with a team, we're going to help them a lot because early stage investing is not passive. It's very active, right? You got to roll up your sleeves.
I like that. I had a feeling you were going to use that term, unfair advantage, because it's actually one of the phrases I remember you using 15 years ago. You used to talk about the unfair advantage in the market, and it's always stuck with me. That's something that's in your mind about, what makes you unique, what's your superpower. There's another number of ways that you can talk about it, but what you're actually flipping on its head is that if we're going to be in your cap table, we need to believe that we can offer something. But I've also heard you talk about is that we're not going to come in and control your company. We are here to support the founder. Can you talk a little bit about that? Because there's a balance to what you just said. Hey, we want to be able to offer something of real value to you, but also not control. There's this relationship because you were a founder.
Yeah.
You understand the founder dilemma or the grind that it is that they're going through.
Yeah, so quick backstory before I get into that. One of the things I started a nonprofit called Ocean. It was an accelerator and a training program. So we basically said, hey, we want to come alongside founders at the earliest stage. We're going to help them build a great business, but we actually want to really deeply build into the founders themselves. And that has never left me. I believe, because I've done it, you've done it, the founder journey is a lonely road. It's really challenging. It is just filled with opportunities for you to get to an ugly place as a human being. Let's just be real, right? If you look at incidences of divorce, addiction, suicide, these things are drastically higher amongst entrepreneurial population than the average population. And that's because it's really hard. And so all that to say, I've always had a heart for coming alongside founders and going hey, I'm going to ask you about your KPIs and how you're doing and all that good stuff. But I'm also going to ask you about you as a human being. What is it that makes you tick? How are you doing today? How's your marriage? How are your friendships? And that still catches people off guard. So it shouldn't, right? It should be normal that a partner in your business would care that deeply about what you're doing. But yeah, so we built an accelerator based on this model of building into founders, and at FireRoad, we're very focused on this still today of we want to come alongside you to the extent you want help in your business. I can't force you to, spend time with me on a regular basis, and you may have another great investor, so you don't need my help in seasons and periods. But as a founder, my favorite investors were the ones who had been in my chair. They knew what it's like. In fact, I was leading a company through COVID, the insurance company. We had raised a ton of capital. We just closed our Series A. We were so close to dying, literally $100-something in the bank and 30 people on payroll. And my wife and I had already personally wired the last payroll. So this is scary stuff. We get through it, and literally the week after we get our check, the round is done, COVID shuts down the world. And we had this conversation with our investors, we're fired up, right? We raised capital, we're ready to go, we want to grow, we want to hire. And one of my investors who led the round was listen, I was in the founder chair during the dot-com bust. Let me tell you how people survived that and what they did to win. And that conversation was miserable because we had to do exactly what we didn't want to do as founders, but it saved the company and it gave us a chance to be we're now one of the category leaders in small business insurance. It's because we survived and advanced through that really difficult phase. And so I share that story as an example of I don't know all that much, but I have stepped on a lot of landmines in this journey. And I can't tell you what to do, but I can share stories about the landmines I've stepped on and how I've navigated those problems. And so I love getting to be an investor that can build a relationship with a founder such that when shit hits the fan, and it will, they will pick up the phone and call me rather than keep telling me it's sunshine and rainbows.
Yeah. How many Tims are part of FireRoad? People like you that kind of have that heart and can have different industry knowledge and background? Because I'm sure that you've got a pretty diverse group of people. Is it 10? Is it 15?
There's two of us full time, just me and a partner who do this full time, and then we've got 89 investors behind us in our first fund, and most of those are founders or entrepreneurs or business owners, and most of them, while they expect a return, and I think we'll deliver on that, and I feel great about that. They did it because they love our heart for serving founders and they want to help as well. They're like, hey, I don't want to just be a check. I would say more than half of our LPs in Fund 1 said, I don't want to just be a check. Like, I want you to leverage my network. I want to spend time doing founder therapy with someone when they need it. I want to go to a conference with it, whatever the need might be. So we've got a small army of folks behind us who are supporting this mission.
Yeah, it seems a really smart way to protect your investment as well when you are investing in the whole person of the founding team, but also providing resources, connections, mentorship.
Which, real quick, this is a little bit of a soapbox, but like the normal venture fund model is the LPs. So the LPs are the folks who invest in the fund, right? We get capital from LPs and we deploy that capital. In most VC firms, the LPs shall never talk to a founder. Like they literally divide, like they keep a wall between them. I'm like, this is crazy. The LPs who are backing you have some of the best experience, some of the best networks, some of the best knowledge. Like, why in the world would you not leverage that? And yet most don't for whatever reason. It's kind of crazy.
Yeah, no, that's interesting. What I want to do is I want to give time for 2 questions, and then we're gonna shift the conversation to some startup community building stuff. So we have time for 2 questions. Make it good. Make it real good. Who's got?
In the back. Yeah, man.
Said, tell me more about founder therapy. Right.
This is a real thing here. Like, I am very convinced that one of the only reasons I'm still building stuff today is because I've had a small group of founders around me for over a decade. Like, I love my wife to death. I have some great friends. If they are not entrepreneurs, and you guys know this, like, they just can't have the same conversation with you. They can't understand. You could spend time trying to describe it, but unless you've been the one who's had to do a round of layoffs for people who you love and you've spent time recruiting into it, like there is no one who can understand it like someone who's been in it. And so I've been in a weekly group of small group of founders get together every week for over a decade, and we do founder therapy. It's like, it's not just founder therapy. It's like I might be talking about a personal crisis or a business crisis, and inevitably someone else around that table has been there and done that. And that group, if I start to get a little too high on my horse, they're going to chop me down as I need to be from time to time. And when I'm facing a crisis and I'm at risk of feeling like my identity is wrapped up in this business and this business is going south and therefore I'm a loser and I'm nothing, they're going to lift me up as well, right? So founder therapy is getting in community with people who understand the journey you're on and being transparent and consistent with meeting with them on a regular basis so that they can call me on my BS and they can lift me up out of the dirt.
Nice. Very good. Yep. Oh, hold on just a second. I can't see. Where do we got? Oh, you. All right, we'll do 2 more because that was a quick answer. Good job, Tim.
So let's say you can travel back in time and you only have 30 seconds before the space-time continuum just rips you apart, right? What's the 30-second lesson you would give yourself as a new founder starting your endeavors that you know today that you wish you knew then?
Getting community with other founders. It took me longer than I would like to figure that out. Number one, I think honestly that is one of the best bits of advice I can give is if you're not in community with other founders, get there now. There's great people in this room, I have no doubt. Figure it out, find your tribe. But it'll save you so much heartache. Beyond that, it's I think it's just the normal, build the right team. I'm just not very good at so many things. Unless I have amazing people around me, I'm not going to go very far. And my tendency is to believe I'm really good at a lot of things. The reality is I'm pretty okay at a lot of things. I'm not very good at that many things. That's why I need awesome people around me all the time. The other one, this is one of those things I've had to learn over and over again is premature scaling is a real thing. Founders are wired to believe that they're going to dominate. And so when you get the first bit of evidence that you're going to dominate, you just start going crazy hiring, you want to launch new products, Like one of my advisors or mentors told me after we raised a large round, he's like, you're gonna be tempted to go build a bunch of other things. Like stay relentlessly focused on do one thing really well for way longer than you think you need to, so that you get permission to do more. Because you go too wide too soon, and like nothing's gonna work out. So those are probably the things I would just reinforce to younger Tim.
Last question.
Yeah, you talk about 3% of the venture capital goes to small businesses, and 2% of venture capital goes to female founders. Can you share your perspective on why that is and how that can shift, especially in your niche market?
Yeah, so just to clarify, 3% goes to founders building for small businesses, not directly into small businesses. But the question is still valid. And, honestly, like it's one of the reasons my partner is Christy Johnson. She's a female, and she did not come from venture or from finance. Like she, wanted to be in this space and worked her butt off. And, I was excited to bring her in and give her a chance and partner on it. And she unlocks networks that I don't unlock. She is in rooms I am not in. Our deal flow is significantly better because Christy's my partner. She is way better at building relationships in communities like this. She spends regular time on the road, meeting founders, meeting angel investors, meeting other women. Like she goes to regular like women in tech kind of breakfasts and shows up in those spaces. And unless you have a partner willing to do that work, it's really hard to find that deal flow. And so I think you just got to be willing to do the hard work and show up in places that most VCs won't normally.
All right, awesome. So, all right, what I want to do is shift the conversation a little bit to startup community and what you're seeing, because you're now invested in a lot of founders that aren't just in Cincinnati.
Yeah.
So I imagine, like, can you name some of the cities that?
Redding, California.
I like it. All right. So
our latest investment.
Yeah, like Redding. There's other cities. What are you seeing that is kind of the maybe the current or next wave in the future of startup communities, thriving startup communities that can kind of create an innovation culture, where they are? What are some of the key components that you're seeing right now?
Yeah, I actually love spending time in like smaller cities like Redding. Like we're finding a lot of fruit in that. And like the thing I'm in Ohio. Like we have a thing called Midwest Grit, and it's real. Like people are like they want to stretch a dollar. They've grown up in the school of like you work your butt off. Like it is just it's part of the mentality in much of the Midwest. And I've found that in communities like Redding, it's very similar. I haven't spent a lot of time around here, but I suspect it's probably a very gritty founder demographic as well. And so we just find like these communities tend to want to roll up their sleeves and get dirty and work really hard. And I think that's one of the most important components. We also find a bunch of Joshes in those places, like people who are like, I'm going to invest a ton of time and energy in making stuff like this happen. Not because it's necessarily going to benefit me, but because I think it will benefit our community broadly. And when you have champions in those kind of towns, you can get amazing deal flow from those champions. So like we build relationships with folks who are doing this kind of stuff in a lot of those communities, and they think of us. When someone's building a company that's a fit for FireRoad, when I talked about that inbound deal flow, a lot of it is that. It's from showing up in those towns. Like there's a few people early on, if you want to build great community, like it does take usually a small group of people pushing really hard, the boulder up the hill for a number of years. But the thing that's really interesting about those communities is that those folks tend to be incredibly inclusive. Instead of trying to build a fiefdom, they're actually trying to bring other folks along and go like, man, this rock is heavy. I would rather not push it along like by myself. I would love for other people to come in. And so they're creating opportunities for other people to be a part of the ecosystem. And there's just something special about that kind of place. So that's why we love these kind of smaller towns that we're spending a lot of time in. Or small might not be in population, by the way. Sometimes it is. Like small might be in terms of like there's not much of a startup ecosystem. So it's kind of nascent, right? Like we don't spend time in San Francisco. We don't spend time in New York. We've done deals there inbound, but we don't travel and spend time in the larger ecosystems, broadly speaking.
Yeah, so you're seeing like it's not as much a requirement anymore that you have to move to the big city to get funded, or that you have to get all of your team from one area, or get everyone to be housed under one roof. Is that kind of like the shift? And then also, how do how are you seeing the companies in these smaller communities connect with kind of early customers in their area or enterprises? Because even a small community like ours, we have some big companies here. They're spending money on R&D. What's the click forward and the bridge, to those things that you've seen from Cincinnati to other cities?
Yeah, that's a great point. That does tend to be one of the success factors in those communities is like the founders building, you go back to like my early criteria, domain expertise. They usually have domain expertise around something in their region. And so because of that, they're tapping into early employees, early customers, and even angel investors who actually know what they're doing, right? Who understand the space. So it's not just capital, it's like, this is capital from people who actually can help them build their companies. So those founders are really intelligent in terms of like, how do I leverage what our community, what is unique to our community and build for that, right? And you're gonna see all kinds of different startups in a thriving community. So not all of them are gonna lean into that, but I will say like, it feels like early on for a startup community to build momentum, they're probably leaning in fairly heavily to one of their strengths. Like what are one of the abundant resources that you have? Because this journey is so freaking hard, as we know, like whatever wind we can get in our sails, we want to get in our sails.
Right. Yeah, absolutely. All right. Well, I want to leave some time for a couple more questions before we wrap up. So anyone else want to ask Tim a question? Yes.
Yeah, I'm just curious, you mentioned that you invest in companies that support home improvement companies and the like. Do you actually do any investment in actual home improvement companies themselves?
The long-term vision for FireRoad has always been to build, buy, and back. What I mean by that is like eventually we do want to be investors in those small businesses as well. We're not there yet. We feel like we can't do back to my earlier advice. I tried to do too much too soon, and I've refocused on like just be a great venture investor first. Long term though, I do want to build a holding company where we're buying long-term ownership stakes in those businesses and we can be sort of another alternative for them. So we're not focused on that right now. Having said that, we have done a couple investments where they're, I'd call them that tech-enabled roll-up of sorts. So as an example, there's a company called Longview. They've built AI and automation for restoration businesses specifically. And so instead of just going out and selling their product to a bunch of restoration companies, they're actually starting their own restoration companies. So they are now this hybrid of like tech-enabled services where they've got, here's one of the cool advantages of that. In like under 2 years, they're at almost $12 million in revenue. Almost no tech startup gets there, but because they've got this like tech-enabled services business and they're able to acquire companies with some existing assets, like they're going really rapidly. So we do have some stakes in businesses like that are sort of this new hybrid, this new approach of like, we're gonna both build for the category and sort of own the category.
One last question. Nobody? All right, here's what I want to do then. Tim, how can people in Redding, California, and there's people here regionally, by the way. So we have Siskiyou County, we have Shasta County, we have people from Humboldt County, Butte County, I'm sure, just, all the way Northern California. How can they connect with you? What are you looking for right now? Also, real quick, can you tell us the average size of your investment too, and typically, and then how can people connect with you? Do we have a contact card for Tim? Is there anything like that? I don't know if we do.
I don't know, but you can find me on LinkedIn.
We can find, and he'll be here. So anyway, go ahead.
Connect with me. So we're deploying out of Fund 1. We raised a tiny $5 million first fund. We write checks of 100 to 150K into rounds of around $1 million to $1.5 million. That's kind of the most typical average. We've gotten as small as 50 and I think as large as 250, but kind of center of target is 1 to 150 into pre-seed stage deals. If you are, and by the way, we are currently actively raising Fund 2 also. So we're deploying out of Fund 1. We'll call it 3 more checks out of Fund 1. Hopefully we'll be deploying out of Fund 2 by late this year. So we are actively meeting potential investors in Fund 2 all the time. I love talking to business owners and previous founders. Those are my favorite LPs, but meeting family offices and all kind of folks who are interested in our thesis around S&B tech. So happy to talk about that. If you're a founder building for the category, go to fireroad.io, hit this apply for funding button on our website. It'll take you to a small form to fill out and we review all of those. So check that out. I'm active on LinkedIn. You can find me there. I do daily writing for founders. It's something called the Daily Mo, dailymo.co. You can sign up. It's literally just a booster shot of motivation. It's like a quote and then a thought from me that I send. It goes out every single day. And I am in the process of relaunching a podcast called From Founder to CEO. It's not been announced yet. We haven't released any of the episodes, but I've recorded 3 or 4 episodes. It was a very popular show that had been on ice for a few years. I get to take over from a friend. So I'm doing that as well. And, showing up in places like this, trying to help wherever I can.
That's awesome. Well, I want to, thank you for coming all the way out here, for going to Houston and getting delayed and coming to LAX and then getting back here all the way.
Super easy trip.
Yeah, super easy. But really grateful you're invested in some companies here in Reading, building network here in Reading, which is really, funny when I've got friends that I'm running with say, hey, do you know this guy named Tim, out in Cincinnati? I'm like, what?
As a matter of fact, yes.
Absolutely, yeah. You just have, your reputation precedes you. It's now nationwide. You're just an amazing dude. So I really appreciate your heart, sharing, and also just your success. I mean, you've been in the trenches, you know it, and I've seen your life last 20 years, and I'm inspired by it. So thank you for coming. Let's give him a round of applause.
Thanks, man. Great to be here.
Cool. All right, cool.